All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for May 19th, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode number 477. So my name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Michael Filighera to be back with us, and you should be seeing his screen right now. And the option professor is back to moderate, so I'm going to turn it over to him.
Okay, thanks, David, and welcome everybody to be here today. We have had quite a volatile period here, so it's going to be very interesting to hear what Michael has got to say about the wave structure, because somebody might say there's been a few rogue waves out there. But when you have a policy go from 145% tariffs down to 10% tariff, that is a big shakeup. And then when you go from people cannot get your uh, advanced technology to everyone can get it in the Middle East, that's a big change. And so when you change these policies so dramatically, you've got to expect that the markets are going to have volatility as well. And they caught everybody leaning one way, and then they got them leaning the other way, and now they're leaning the other way. So we're going to find out what's going on here and see if we can settle out with some of this stuff. Michael, we got the S&P up there now, and
We do.
like I say, we've gone from 6,100 down to 4,800, and now back to almost 6,000,
Yes, sir.
all within 6 weeks. So what is the wave structure indicating? What's going on here?
It actually is indicating a lot. And I found today to be exceptional. The one thing that you didn't mention was that we got that third downgrade on
On the
U.S.
credit.
credit
Yeah.
and from Moody's.
Yeah.
So the trifecta is kind of in now, I guess
Yeah.
you could say. And I found it very interesting because what I read was that Moody's wasn't downgrading the credit, Moody's was downgrading the government. And that's what I said. Moody's downgrades the government, and I thought that was a very interesting way to put the whole thing. But to go just to talk about the S&P 500, I'm just looking at the cash market, um, which can be always easier because it's going to be constant. In other words, the future the cash doesn't have any premium in it.
No
Right.
contango. What about the time frame on this chart?
The time frame on this chart, it goes back to 1928.
Oh, okay. So this is extremely long term.
This is the biggest, the most largest amount of data that I have. The only one that exceeds that is the Dow, where I go back to 1902. But I wanted to just start by saying that if you follow Elliott Wave, you know that Elliott Wave goes on that the impulses are five waves and they come in degrees. So you may ask, how did I start my count? Well, God bless it that I went and I found R.N. Elliott's original works and went in and found that he had put grand supercycle, which is the highest degree that you can go. And he put the one at the 1929 high, and he put the two at the 1932 low. And I thought, okay, great, great start. So if you know Elliott and you understand Elliott, you realize that it's a series of building blocks, and that we have a five-wave sequence. So here we have waves one and two on a grand supercycle. So that begins, we're starting to get into a grand supercycle third wave beginning in 1932. So what's gonna be inside that? Going to be five waves of supercycle degree. Those are the sky blue, of which we have one and two. And then what's going to be in supercycle wave three? Going to be five waves of cycle degree, of which we have one and two. So in essence, what we've done is we've got one, two, one, two, one, two before we started to really blossom within this third wave. So on an Elliott basis, you are in a three of a three of a three, a third of a third of a third, and they're all extending. But they're extending. The best is right here within cycle wave three, which is inside of the supercycle third wave. So within that, we have five waves of primary degree within the cycle third, of which one, two, three, and four are done. So we're in primary wave five. And once again, what's inside of it? Five waves of intermediate degree, of which one, two, three, and four are done. Now, I'm going to take us very quickly up to, I got to go out to my 5-year chart. We got so much data. That's the fourth wave. That's October of 2022. that effectively, as you and I have talked about so many times, that's when this whole rally phase started. This last rally phase. It's an intermediate fifth wave. What's going to be inside of that? 5 waves of minor degree, of which you have 1, 2, 3, and 4. 4 being just before we got the announcement, it might be a good time to buy. I think I'm going to put a pause on those tariffs. From that low, that was the low for minor wave 4. So from that low, we've been involved in a minor fifth wave. Now here's the gig. Minor 5, when it's complete, will complete minor 5, intermediate 5, primary 5, cycle 3. We're very close to reaching a major, major high. Now everybody goes, okay, but this just seems like we're just beginning. And it's like, we have bounced around, as you very astutely put. Volatility has been pretty great. We've gone from 61 down to 48 and back to 6,000. And what did you say?
6 weeks? Yeah.
Yeah, 6 weeks. That's an incredible move in both directions. But so if we're getting ready to finish, could there not be some news event or some geopolitical event or some event that could just tip this thing right over? We've seen our credit downgraded. We've seen them. I don't know if you caught the bond market today, below 113 when it's supposed to be rallying because we're in a lower rate atmosphere. And what have rates been doing? Creeping higher, creeping higher, creeping higher. Yields are moving up. Now we got a downgrade on our debt and the government. What's that going to do? So all adds to our discussion, right? So here we are in this minor fifth wave up, and now I can bring it down, put it on the daily. There's that minor 4 down there. It's going to be, again, building blocks, folks. So it's always going to be 5 waves. As you go down in a degree to finish that next fifth wave, it's going to consist of 5 waves of its own. But here it's a minor fifth, so it's going to have 5 waves of minute degree, so we're getting smaller. And that, so far, we got 1 and 2, and I think we finished 3 at today's highs. So I've been really feeling that off of the low that we had on the 21st of April, it's been quite the rally. It's been a very strong rally, and it put in a clean 5 waves up, which I, again, believe finished right there. And I have it on the ES, so I'm going to quickly just slip over to the ES so we can see how I'm labeling it. So that's the daily, same deal. There's the minor 4, 1, 2, and there's the 3. So I'm looking for a pullback. Now, this is where it's going to get interesting, because what I also want to bring into this conversation, and I'm very glad that it's you tonight, because it's about options. And let me just say that we're in the third. I'm looking for a fourth wave, minute fourth wave. Elliott teaches us that a fourth wave in motion will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. Since I'm in minute coming down, the one lesser is the minuet, and there's that fourth wave, and that low happens to be 5,600. So most common pullback or most common fib level for a pullback is 38.2%. That's 5,650. So, but I've noticed that in this whole rally, strong rally phase, all the pullbacks have really come in very shallow. They still do the required 3 waves, but they're shallow. Now, I want to break this down because what we did, you're going to see something that becomes very interesting. I'm going to bring it down to that 15-minute chart. And I'm going to look right there. A, B, 1, 2, 3, 4, 5. It's an ABC. Got to put a 4 underneath it. And this morning, because I make an update for my membership in the morning. And I noticed that, and I thought, okay. And then we rallied. And what did we rally in? 5 waves. Small, but still 5 waves. And then 3, and then we launched. So it was the perfect setup. So I said, well, and my update last night, I had said, well, I got the 3 over here, and the 4 maybe is in, maybe it isn't in. And then, of course, we, Globex and all the rest happened, and here we are. So was a fourth wave. but it was in a reaction to the downgrade. So again, interesting by interesting. And there was the Globex. Globex just, let's kick it off. And then Europe kicked behind. But our market had different idea. And it isn't that they just kind of said, well, we're in a bullish move, we're just going to keep buying it, because being downgraded is not it's not good. Period. It's not good. And how things are going are not good. And the fact that tariffs are still kind of hanging over the markets is not good. But yeah, we rallied from the opening. And then once again, I wanted to take a reference point because last Friday was the May expiration. So a lot of gamma expires.
Mm-hmm.
And so when that happens, normally we get a little pop in volatility, but we can get some downside to kick it off. We got the downside. So by the time we got in today, the first bar of our opening was down, but it was like reach that level, boom. Now in the process overnight, as how the levels were put in, we overnight coming into today, we went through the volatility trigger, which shifts the narrative from negative. Well, actually, we were in a positive mode all the way up here, but we broke that volatility trigger, which got stacked. So all of my levels got stacked, like large gamma levels, where large positions were sitting. That the path of least resistance, in my view, would have been down. I mean, excuse me, up, because it was so stacked coming off. We had large gamma 1, large gamma 3, volatility trigger, zero gamma levels, which is nothing, where just gamma starts to shift from one side to the other. And in this case, it would have been shifting from positive back over to negative. Thing to remember about when you're in a negative atmosphere, a negative gamma atmosphere, the hedge, the trade is you sell. So it produces more selling. And you're selling into weakness as these levels get broken. So when you got the large gamma 1 and large gamma 2 and the volatility trigger all broken, and the spiders kicked it even harder. So it became very interesting to me, because I'm thinking, well, that's a 4. And I think it should go up. And then once they started, and it was nonstop. First thing they did, they retook the volatility trigger that reinstates it right where it got broken. And then they built on that. And then it took back the next level. And they built on that. So the positions that were there, the dealers and or the traders that had the positions were like, no, we're not getting out of these yet. Now that brings me up to still the need for the market to drop down for this fourth wave. And I think they could do that this week into next week.
Well, you got Nvidia next week, so you think that could be the trigger that disappoints the market?
It's really hard to say,
because they bid it up 50% from the bottom. So Nvidia is up 50% from its bottom. So going into this report, they're going to be looking at the margins. They're going to be looking at how much that, because the guy was over in China saying them not being able to sell their chips to certain groups cost them $15 billion.
Oh, that's revenue. Even more, because I heard 5.5 billion.
No, that's the charge they took. The revenue they would have brought in was 15 billion.
Oh, okay.
Yeah. Anyway, it's a situation where, there's a lot hanging on Nvidia, because believe me, if they announce anything that's not good, that is not good.
Well, let me share with you, because I'm sure you noticed it as well. I had felt that I always look at where the options are trading, and as we're coming into the expiration, because Friday was expiration for all the underlying stocks as well. And I had felt that they were going to peg Nvidia between 135 and 137. And they got 135. But within the first 15 or 20 minutes after the bell, Nvidia was trading at 132. So immediately they just dropped it 3 points. I'm thinking that also was about the same time that Moody's did a little downgrade. So, but I don't know if that was related. And then again today, what did Nvidia do? Back above 135, as if nothing ever happened.
Why
So I'm
don't you
trying to
put up
get.
the, can you put up the bond market? Because I have a chart on the 10-year yield. I'm not looking at the future, but the yield to me looks like it is about ready to explode to the upside.
Oh, and this is it. Here you have it.
Oh, is that
That's
the
a
yield there?
50
Yeah, yeah,
minute.
yeah. Well, I'm looking at a chart. My actual chart goes back 20 years. And that takes
Okay.
a lot of the crazy bumps. In other words, my 20-year graph on when they were cutting 100 basis points last year,
Yeah.
I had a nice blue moving average at 360. It came down to 360. And when everybody thought the rates were going to keep dropping, I was saying, no way, because this trend line
Right.
is up. And that was the low, and the rates went right back up. Recently, we went to 390, and everyone thought the rates are going to tank. And I said, no, my little moving average here is telling me it's going to go right back up again. And
Yeah.
now the RSI, the relative strength momentum,
Right here.
is telling me that it is right at that 50 number,
Uh-huh.
57. And
Uh-huh.
if it gets above 60, that's when it can accelerate to the upside. So we're not that far. Like
No.
if we went to 480 or 475 or 480 and the RSI got above 60, 60 is when the RSI jumps to 80 sometimes. And if the
Yes,
RSI was going to jump to 80, you'd be looking at 5.5 on the 10-year. And I think that might be something that the market is not particularly prepared for.
I agree. Now, what I find so interesting, this is a count that I think I put this on probably because you and I were talking. Because there I am. There's your 3.6, and there's the bottom, as you said. So I think we did this one other time when you and I were on the show.
Yeah.
Now, and I agree. Look what it's done. It's done nothing but go back up, came down again. There's your 3.9.
Right.
And it's like, nope, nope.
And when you think about it, they're exploding the deficit, not only the
Yes,
fiscal deficit, but the national deficit,
yes,
and they're cutting out all revenue from income tax. I mean,
right.
imagine if you were running a company and you were running up your debt, but then you were telling the people who you were loaning money to that you were going to cut off your cash flow. I mean, wouldn't that be a dangerous combination?
It's making me laugh, but yes,
Yeah.
yes.
Well, it doesn't make you laugh any more than we're going to go with 145% tariffs, and
I,
then saying they're going to be 80%, and then Besant drops out and says it's going to be 10%, which is exactly what Stanley Druckenmiller's been saying for 3 months. And it's no coincidence that Besant is the protege of Druckenmiller. And but that was cooler heads. I mean, that's really, the 145 was going to kill us. So at least Besant was in there, showing some ability to bring it somewhere near reality. It's still very high. It's 5 times what it was last year.
right. But China also they dropped first. They said, yeah, 10%. We're dropping, we'll go to 10%. And then because
Well, they don't, them dropping at 10% doesn't matter. We don't sell them anything. The big thing was them going down to 10%, and also who knows what else. Because
right.
they listen, if you're negotiating with somebody and they know you can't take the heat. In other words, there was no way Trump could take another 1,000 points on the S&P and get his agenda through. They were already like getting very upset as Powell numbers were tanking when we were at 4,800. So there's no
Yeah,
way he could have kept that up. And so China knows that. And that's how they went to Geneva and they said, hey, listen, 10% and we'll play ball. And even there, it's a pause. But I think the most dangerous time for the market is going to be August, September, and October, because by then Trump will have gotten his budget. He will get his debt ceiling and he can start deregulating. And he doesn't need to be so nice. So he could go back into the disruptive mode, not
yeah.
worrying if the stock market drops 1,000 points because he doesn't have to be worried about his popularity that second. So I just think that time frame can be very bad for the markets, and that would be the time frame that I think could be very interesting.
I agree. But in terms of the time frame, I think that we go down and fill this correction in the S&P. And the bond market is going to continue to do exactly what it's doing, and it could end up at 5%. While the market then turns and rallies all the way because they're going to be convinced that the Fed's got to step up to the plate and just save them. But I don't see them doing that because there's just too many other things going on in terms of inflation. And
Yeah,
it,
the Fed's not going to bail out the stock market by
not
itself, and
anymore.
and they're definitely not going to bail out a government that is just off the rails as far as spending is
It's
concerned.
definitely off the rails.
So,
And
but they would step in if obviously if the unemployment goes from 4 to 5 or 6, obviously then they'll do. But what are they going to do? Drop interest rates while everyone's losing their job? What's that going to do?
yeah, and I'm not so sure that everyone is actually losing the job. I mean,
No, I'm saying if that happens.
oh yeah, no, you're
Yeah,
right.
if I mean they're not going to react to the fact that the stock market might get up and down a little bit, and they're not as long as it's orderly. Obviously, if we seize operations, they're going to go in there. But
Right.
if it's orderly, as we saw down to 4,800, they didn't step in at all.
No, I do. I just think it's like we're. Did you read anything Target was supposed to report? I think today.
No,
Um,
they're not reporting. They're reporting on Wednesday, I believe.
oh, on Wednesday. Okay, because they're the next up that like Walmart, which I loved.
Yeah, but
What?
the Target's underwater. I mean, everybody doesn't want to go there anymore, and they have no, they got all kinds of problems over there.
Well, they may have problems, but still, they're going to be
Yeah.
like Walmart, and they're going to have to raise their prices because
Oh, they will have to raise them a lot more than Walmart will because Walmart can tell the vendors to take the eat. I mean, Trump wants everybody to eat. He wants, the Walmart to eat. He wants Congress to eat the deficit. He wants everybody to
yeah,
eat.
he's giving himself and all of his cronies huge more tax breaks.
Well, I don't know why more isn't made of the fact that we have the Cantor Fitzgerald guy and his sons are now running it, and then we've got Besant who has homes in the Bahamas, and then we've got the Trump and his sons going around, and Kushner and Mnuchin. So I mean, I don't know why more is not being made of that because it would be very naive to think nobody's saying anything about anything. Yeah.
I agree, but something's up, and whether it actually comes through or not, I think there's a lot of different levels in terms of this administration that they're starting to hit the brick wall, and the brick wall is being provided by the Supreme Court. Still, the faithfuls, the two justices that are faithful to this administration, continue to just say they dissent, but they're being met. Even the dissensions are being met with like, that's not smart, that's not right.
All right, now
And
let's talk about the bull story. The bull story is that this deficit spending, and let's face it, the reason we went from 2008 to 2024 is the government has been spending a way, way more money than they bring in, which is a form of stimulus. So people are saying that this big deficit spending is going to bring in 500 billion stimulus into the economy, and that is going to make earnings surprise on the upside and the oil prices going down and owner's equivalent rent going down is going to take
no,
pressure off the interest rates. I'm talking about the bull story, and the bull story again is
okay,
that earnings are at
okay,
260, 270, and if these companies can figure out how to make money, and they seem to do a very good job at making money because at the end of the day all the charts and all everything it comes down to earnings and how much money they're going to pay for the earnings. So right now they're paying 22 and
right,
the earnings are 260 and that's why or 270 whatever, and that's why we're somewhere where we are now. And so the question is do those earn, like again, when we were at 4,800 and tariffs were going to be at 145%, everyone was cutting their estimates. And when they cut their estimates and they said there's no way you're going to hold 22 to 1 to PE ratio, so they cut down to 225 and you cut it down to 20 and you're at 4,500.
yeah,
So
yeah,
if the earnings are there, the stocks will be there as long. But here's the kicker, and this would be the wild card. If we went up above 5% on the 10-year, higher interest rates does affect valuations, and
absolutely,
that of course, because if the valuation breaks down to 19 where it is the average, or 18, and even if you did 280, which is what Goldman Sachs says next year, if you went down to 19 you'll be at 53.20. So really the kicker is, and that's the Achilles heel nobody's talked about, the earnings might be there, but if the valuations get hit because the interest rates go up, the yields
right,
go up,
right.
then that could be the Achilles heel. And like I say, also Jamie Dimon said fantastic thing today. He goes, the turn and the turn in the markets and the complacency is unbelievable. And complacency can be found in the VIX. The VIX was at 60 and it just went down to like 17, 16, which is really a low one now. And now it's back to 18. So if the VIX gets above 20, definitely above 25, then your scenario that this thing is going to go way down is 100% accurate. So you can really look at the VIX, and the VIX will confirm or deny the idea of it going down. Because again, when the VIX goes back above 20, it'll be for a reason. And we know one thing about the VIX. Once it's above 20, there's a buyer's boycott. Yeah, you can't find a buyer, and then all of a sudden people say, God, maybe that was just lucky it going back up again. Let me get my money out of there,
And so I think now something that we need to add into this is the options and how options are trading and how, again, I don't know.
Well, where's that JP Morgan thing you have on it? The collar. Where's the collar? Do you know where the collar is?
I do. So let's go over there first, and let me go back over here and go to the SPX, and I'm going to go.
For those of you who are listening, don't know what a collar is. It's where you sell a call option above and buy a put underneath to put parameters on your equity, which means your equity can't go any higher than the strike price of the call, and it can't get any lower than the put strike price. And that's why people do the collars. And supposedly JP Morgan has a collar on that Michael talks about. I have no idea where he gets this information. God bless him. But it's an interesting sidebar.
JP Morgan themselves.
Okay. Well, like I say, you just got to find it,
5905 is where the calls are. And also just to add to that, thank you very much. That was a very accurate description of what they do. But JP Morgan is hedging. This is the hedge that they put on their hedge funds. And the hedge funds are gigantic. And they always do 40,000 contracts. That's the other tell. They do 40,000 contracts.
So are they doing it on the future or the cash? I mean, what do you use the 5905? Cash?
Cash.
Okay, so we're a little bit above their top area then.
Yes, but we've already tested it, but it's still a month out. It's more than a month out.
Yeah, I'm just trying to say is that it's at the upper limits. Where is their put?
The put, I believe, is down. Let me go. I gotta start searching.
Probably $5,000.
There it is, 5310.
5310.
It's been wider. This for June. I'm like, wow, you're really tightening that up.
Yeah.
Because both sides are going to get tested.
Yeah, it could. It could. Because a reversion to the mean at this point, which would be, because a lot of these moving averages on the 1 year have not crossed over. They're starting to do that now. But I've got definitely support on it between 54 and 5,500. So going back and there's a big gap between 5,300 and 5,350.
Now I want to go to
that's a big gap, isn't it?
Yes, yes, it is. Yeah. I want to go to the June 20th expiration of this year. And it's always in the AM, right? So there's a big one in the AM and they have another one in the afternoon. Now, check it out. 4,000. Look at the puts. 233,000 puts. Look at the calls. 207,000 calls. 207,000. In recent history, in recent times, have you seen a position that big? And the 200,000 came from one person or one somebody.
Entity.
This isn't added in. Now that's the floor. Okay. And now you can.
And what's the 5,300?
No, that's at 4,000.
Oh, 4,000.
I'm going to show you the other side. It's a strange collar, but I'm just going to show you the other side. I'm going to come all the way up to 6,000, 215,000 puts. 229,000 calls, sitting at 6,000.
To me, that would be a rider. That's a collar rider. That's a strangle rider. Strangle rider.
It is, but it is some. Yeah, it strangles.
Yeah,
it is some big straddles.
Two different strike prices. Got to be a strangle. But it's also a rider because nobody's buying. That many contracts, the market maker who hedged them. Yeah.
It's a floor and a ceiling.
Yeah.
But here's another one that I think both can get tested. And one or the other can get broken. which, yeah, if they're short.
That's some huge volume, though. There's something going on there. Of course, you'd wonder when we're up 5,900 and he's in the 4,000, why he's not pressing the put at this point.
I don't
Because
know.
that put's got to be, at a low premium at this point. So he might as well buy that back and roll it up, unless he thinks there's going to be another big drop.
Right. And I don't know if they're long or short.
Well, like I
I
say,
mean, obviously somebody's short.
Yeah. I would imagine the market maker is long and did hedging to get it long, and then the other guy is riding the premium and trying to just make money because it looks like a for sure. You know what I mean?
Yeah, I mean, 161 of those traded today.
4,800 at 6,100 on the S&P looked like a for sure until it wasn't a for sure, right?
But I'm just finding that this to be very, very interesting because what this does, it skews the gamma, right?
Right.
So when we're looking at, we have call walls, put walls, volatility triggers. So there's two functions right there. Gamma, which I would allow you to just tell the people what actually that is. What is it measuring, and it's telling you how long or short your position is going to get when it goes through a particular strike. But in this case, we've got that, and then the other factor, which we've already talked about, is volatility. Now, volatility was always considered the fear factor, right? So when the market is threatening to go down or suddenly gets into a huge sell-off, volatility will cruise to 60 in a heartbeat. So they consider the fear factor. But it's really much, much, much more than that, in my view now. That's what it was, but now it's being used for risk on, risk off. So when you talk about what is risk on trading, and it's like, I'm sure we've all now watched where, particularly the last couple of weeks, where the market just starts to rally and just rallies, very minimal pullback, just rallies and minimal pullback and just keeps going up, because what they're doing is they're selling the VIX, which is a cash, and they're taking that cash and they're reinvesting it in the volatility of the underlying. So you'll notice Tesla, Apple, Google, Meta, particularly now, it was definitely in the Max 7, suddenly just kind of marching themselves higher. And if you think about it, okay, you're an investor. You come in as the public. You want to buy that call. The dealer sells you that call, but immediately hedges. And what's the hedge? They buy the underlying. So again, it's a self-fulfilling prophecy. If you keep doing it, they keep coming in to buy them, the market's going to move higher. And so volatility will creep low. But this time, we saw just last week, Jim, did we see it go below 18?
Mm-hmm.
It was riding around 20 after going up to 34, 40, whatever, and then coming back down. It was very stubbornly not going to go because the word is out that volatility is too cheap. Now that goes into some of the other things that you mentioned today as to why, and because of the value, because of valuations. So folks, there's just a lot of things now being put in, and it becomes more difficult to say, well, the market's bullish or the market's bearish. It just becomes way more difficult.
I was wondering because there is a few companies that I'm watching right now, and I wanted to put some focus on the earnings for Nvidia next week. And if they come out very good, there's a number of companies who seem to be possibly going or getting bid up because of it. I wanted to see what I just wanted to see what yours said. First one is Vertex VRT. I got 4 of them here that, if these guys, if they get a report that takes Nvidia from 135 to 150 or something like that, the other opportunity could be in these 4 stocks that I'm talking about. So
this one, actually, this is a weekly, and I'm on the 3-year weekly.
Mm-hmm.
It's not looking bad. It reached a high in late January. Mm-hmm. Of this year at 155, almost 156. But here's the catch: 1, 2, 3, 4, 5. It came down in 5. It's going up in 3. It's probably got another 5 down to do.
So this you don't think so this would be a rally of which you'd look into the puts then.
Yeah. And the
What
reason
about
is
okay, let's see if they all look the same. ANET.
ANAT,
ANET.
ET.
ANET. Arista.
Um,
Arista.
it looks exactly the same. Count it. One, two,
Okay.
three,
All
four,
right.
five.
Because this is good. Because
But
you
no,
know,
here's the
I was thinking they could go back to the highs. And you're saying that in fact, is that a Fibonacci throwback or is it a little bit more?
well,
You know, from the 133 down to 65, throwback to 100. Is that about a fib?
I'll just add it. We'll see. Yeah, 50%.
61.8?
No, 50.
Or just about 50. Okay.
And a little bit above 50 now, it's sitting right at 50. The close is right at 50.
Yeah. How about
Um,
this next guy, Oracle? Because Oracle, like I say, is way off the high as well.
yeah, but he can sell part of his mansions here in San Francisco.
That's right.
No, this one actually is an ABC down, and it's five up.
So you think this one looks better?
Yeah,
Yeah, and Oracle is not a bad name to keep an eye on because, like I say, used to be $200 and went down to 125, and now it's at 150, 160. You know, this
yeah.
thing could benefit very well. What about the big chip maker, Taiwan Semi,
What is it?
TSM? Yeah, TSM.
1, 2, 3, 4, 5. This is kind of weird.
Similar to Oracle.
No, but this is the other side. It looks like it's five up. So it could be A, B, and this is all a C down. So it's an A, B, C down, and 1, 2, 3, 4, 5. It could be, if we really broke it down, wave one or wave three, or it's a little bit of a strange pattern building here.
Yeah.
But this one, if it pulls back and holds, this is again a three-year weekly. If it holds 170, 173, or even
Mm-hmm.
as high as 180,
Yeah.
might come down and fill that gap, which
Right.
which it just created 2 weeks ago. That would be a positive, and then we probably should rally.
Yeah,
What
because like I say, these guys produce over 90% of the chips, and this guy at Nvidia and AMD and all these people, they seem to be getting an awful lot of orders for chips, and somebody's got to make them, and this is the guys who do it. And this thing was a giveaway at 133.
what I'm just a political toss in to the conversation.
Yeah.
What happens if China says, okay, you guys do what you want, and they just, without any warning, without anything, they just walk in and take Taiwan?
Well, that's always a risk, but it's also a good offset that they've built a place in Phoenix to make them. But you know, I think there's an expertise level over there that people dismiss, and the expertise might be not as easy to replace as people think. You know,
Right.
everyone thinks it's just cheap labor, but it could be a
Oh,
lot
no,
different than
no.
that.
And at Taiwan Semiconductor, oh, God, no. Yeah, I
Yeah.
agree with you.
What
Um,
about let's look at Marvel because I'm telling you that was interesting to me because used to be 150, went down to 45. They've got a new relationship apparently, a partnership with Nvidia on their new platform. That sounds like good news. They've got earnings on May 29th and they've got the Fantastic Four movie coming out this summer, which generally seems to be a moneymaker. Is there anything here that could tell you that it might have a rebound rally towards 80 to 85 or something like that?
it's not as nice. This is kind of 1, 2, 3, 4, 5. Then A, B, and I'd have to go down one. Yeah, that's it.
Yeah,
And
I was thinking
it's
if it
an
gets through
ABC
60,
up.
if it got through 67, I think the horse gets out of the barn because that's where it hit
I
that
would
yellow
not
line there.
disagree with you, my daily, but
Yeah.
you see where it is on the
Oh
daily?
no, it's having trouble at 67, no doubt about it.
Yeah, it's having a lot of trouble.
Yeah.
And now it just kind of, today they were down, although they're bidding it. No, they're not bidding it up a little bit. I don't know. But no,
Well,
I don't.
what about the formation of the first run, then a pullback, then another run, then a pullback? So where would you want it to hold if it was going to just be a pullback and maybe take out 67 and make its way to 80 or 90? Look at that gap. The gap is screaming, come and fill me.
It did today.
So today should have been about it.
Yeah, and
or maybe a little bit
it's
further.
sitting right at the 20, the daily 20. But let me see. Let me hold on. See, there's the gap, and it filled it. Today's move down filled the gap, and then it closed back up at the high. So yeah, somebody else has the same idea as you.
Well, like I say, I haven't pulled the trigger on it, but I really think that the setup is there. Because look at Trade Desk, TTD. That had a similar look to it. And boy, did it make money on the upside. It jumped from 60 to 80 in a couple of days. The options went up 10 times in price.
What was that symbol again?
TTD, Trade Desk.
On a bigger gap too.
Yeah, you see how it made
Actually,
that
there's a
little
big
turn?
difference in this one because this is 1, 2, 1, 2, 3.
Yeah,
All four. This is totally different than the other one.
yeah, totally different setup. Yeah,
But look at that nasty gap down. Wow.
yeah,
That
yeah.
was on the tariffs, right?
No, I think they probably announced earning that disappointed because that would be around earnings time.
Yeah, it was. Here, there it is. Okay.
And then, of course, people, were getting negative on the market as well. And so one thing leads to another. And the next thing you know, everybody wants out.
Right.
What
What are
about
they?
gold? Let's take a look at some of these other markets before we run out of time. Let's look at gold. I think gold's got to get above 3,300. If it does that, it's right back on the bicycle. If not, the possibility of going down to 29, 2,800 is not off the table.
This is my daily chart, and this is all nicely labeled.
Yep.
And ABC down, and it came down to support.
Yep.
100% support, which is perfect.
Yep.
And that's where this downswing was as large as this downswing. And it exceeded it by a little bit, but now it's well back above. I think it did very well today, although it's off a little bit right now. But it's paying very close attention. If we need the dollar back below, if the dollar drops back below 100, this is definitely going to be back at 34.
Now
So
the thing is as far as so you would say 30 above 3,300 it would be a little bit of a green light.
Yes,
Yeah.
but I think it's a little bit of a green light. There's still downside it could do.
Yeah, you see, I have a 2,900 too. You're down there at the 29s as well. If it breaks, 31,
Yes,
30, yeah.
yes, but it's still a correction.
Oh yeah, no, the long term trend's up.
You know, so I mean, my next move, I see 35 to 36.30. These are my little window, and then here I got a whole bunch up here, and these are much larger, much longer term. The green, but I'm thinking we could top somewhere around 42.86. I mean, and the thing to remember down here, yeah, we can pick spots because it's traded here. When it gets up here and it's a one shot move, it's like people say, "Well, how high can it go?" Look at the fibs. That's how they're all being programmed in.
Let's talk about a couple of stocks that are in industries that are, let's say under pressure a little bit. Merck used to be 140 bucks almost, went down to 75. I mean, is that thing looking like it's tapped out down here? Because
Oh
Trump is talking about all the drug companies charging what you can get the drugs for in Mexico, which means he's going to try to take away their entire profit. Now, somebody in their lobby is going to go in there, something like Bessent did, and said, "We can't do this, sir," and then he'll reverse himself, possibly. I think so. If he
oh,
reverses
he
himself,
will.
this thing's on sale big time. Correct?
It is, and I'm out on my 3-year weekly, and it's just like looking sick as a dog.
Well, yeah, but I mean, if you wanted to short it, have you done it? Have you wanted to sell it? Have you done it? Hey, how about that thing hitting the purple line?
This is the monthly, my
Yeah.
max monthly, and
So
that's the 200.
yeah, so this is where you would take a shot at it, 75 bucks
Yeah, yeah.
with a hedge.
Well, yeah, I would definitely think about putting puts underneath it.
Well, yeah, like I say, as a hedge. But
Yeah,
the thing is like I say, if he reverses his position on it at all or moderates it, like United Healthcare is another example, UNH. The darn thing went from like, well, you go see. I mean, it went to 250 bucks. Is that United Health? Yeah, look at it. Again, hit the purple line. The thing popped off at that 250 area up to
today,
315. Yeah.
today, it
And
was.
insiders have loaded up while it was down.
Are
So
they?
they know their books.
Well, then why
Well,
they come
they're
out
having a
and say,
problem with
well,
they're having a problem with Medicare, and they're going to have to redo the Medicare. But people are not going to not get sick, and they're just not going to use United Healthcare.
but they went one step
So
further. They didn't just blame Medicare; they blamed Medicare Advantage,
that's it. Yep.
and it's like, and now I'm the big thing. I know I think I talked to you about this, whether we were online or not, but I think I talked to you about it. It's like when the previous administration passed the law that said the maximum out of pocket for medication via Medicare would be $2,000. So prior to that, I mean, it was upwards of between 4 and 6,500, depending on what your Medicare Advantage program, covered. Now, when you're talking about people that, particularly seniors, that tend to be sick more times than not, or just have uh, just more disease, right? More cancers and everything else, where just to get your treatments are extremely expensive. You could be paying like $4,800 a month for a drug that's going to keep you alive.
Right.
And so when they're going to start to play around with this, it's like, excuse me, but you're playing around with people's lives. And you're telling me your company didn't make enough money, and now you're blaming that. And now we have a government that's basically sitting around trying to figure out ways that they can cut Medicaid and Medicare. So if he can really get them to do lower prices, which I doubt, can you see companies like Gilead saying, no, no. What about all of our R&D costs? If they're not willing to just even allow after 10 years, when their patents, they all scurry to renew their patents so that they don't get generic. So there's no threat of generic. But the generic is coming, and we know from where, and that's why he's attacking Mexico.
Yeah.
Mexico and Canada. A lot of generics are produced there, and they're exactly the same. So they're not going to give up that patent because they're not going to have generics in this country because they see a cash cow.
Mm-hmm.
Do you know how many products that Gilead puts out that keep people alive that would be dead years ago?
Yeah, without having the ability to make a profit. What about ExxonMobil? Again, the energy markets are in the toilet a little bit. What XOM?
Yeah,
Because that one looks like it's either going to break up or down very, very sharply.
I'm staring at it because I'm just thinking.
I mean, it looks like it's on the ledge.
Yeah.
I mean, if it started trading 105, 103, I mean, you don't think that red line's going to hold it, do you?
This one?
The one that shows the low at like 96 recently. This thing starts taking out 105, 103. It'll blow through that 96, don't you think?
ABC.
Because look at those averages, all underneath. They're all inverted to the downside. I mean, the momentum is under 50.
Okay, this puts in a little better. Right now, we got all this rally.
What distribution, huh?
Yeah, this is a big 5 up. I'm going to call it, and this is ABC A, ABC B, and this is like 1, 2. Get out of my way.
That's what I'm thinking. And the puts are cheap, so that's why I'm
Are you kidding?
Yeah.
Are they really?
Yeah. Well, I mean, cheap if it's going to go from 106 down to 76, that's for sure.
Okay. No, I hear you. No, that's well said.
I wouldn't day trade this thing or something like that. I would say, hey, listen, let's play this thing for a chunk of money, and you might have to go out to the July 18s and give yourself 2 months. Two months for it to materialize.
A lot further. July is just a starter.
Yeah.
I'm going out to December.
Yeah. Well, you don't want to, I mean, sometimes, the premiums could be prohibitive. You got to price them out.
But you can always do that, the spread.
Yeah, you can spread it out. But then, of course, you got 2 things to worry about, the long and the short.
That's true. That's true.
Yeah. So anyway, those the healthcare and the energy markets. Freeport McMoran was picking up a little bit today. What about FCX? The copper market. Is there? I mean, they are.
That's the market that nobody really looks at except people such as yourself.
Yeah. Well, I know when they start doing stuff like building things or doing things or infrastructure, they're going to need copper.
Yeah. Wow.
I think copper's used in these data centers too in
Oh,
some way, shape, or
this
form.
one, this is the 5-year weekly.
Hmm.
There I got an A, there I got a B, and that looks like a nice complete C.
So
Maybe.
you could be on 5 ways up.
I working on it.
Yeah, working on it.
One,
Well,
two.
36 to 56 wouldn't kill anybody.
No, but here, look at that. It's stuck at the 50. But now I have to tell you, if I get, yeah, this is because it did that slider there when gold decided to puke $100. Um, if I can get this all back in alignment and we get our moving averages in alignment to go up, it'll cruise. It will cruise big. The eight's getting ready to get back above the 200 and the 20 never drop below it. If I can get those two moving up and start attacking that 50, which I think the 50 might go flat here.
Yeah.
And that gives it an opportunity that we get an alignment to go up. And that would mean that there's 200 on the bottom, then the 50, then the 20, then the 8. And if that happens, yes, get out of the way.
Let's hit a couple of these ones that have earnings coming out on Wednesday, so it gives people a little bit of time to look. On Wednesday we have Target, and Target, that's been in the toilet. So, is there anything there? Is there any there?
um, again, 5 years, they've been in the toilet for a long time.
Is that an up flag down pole though? What is that?
I'd like they're trying.
Yeah.
Yeah, I don't know. I mean, no, I'm going to say, let me go one more. It has so much downside room.
Yeah.
But we have to think about that this was all prior. This was cheap money. So if they're, yeah, credit's hitting them.
Well,
Yeah.
Dick's Sporting Goods just bought Foot Locker or tried to, whatever, and so footwear seems to be somewhat popular. What about Deck, DECK? They are coming out on Thursday.
I have to say that again, monthly, but let me bring it in just a little bit here and take a look. Oh, that's straight down, Jim. It's never all by itself. It's just a standalone complete. And that looks
That's
like
why they picked up Foot Locker, because Foot Locker had collapsed. So they're just buying it because it's $10 a share, and it used to be like 50, 70 or whatever. TJ Maxx. How about okay? Here's a good company. TJX. TJX. These guys, they buy cheap stuff and sell it.
Maybe not be so cheap.
Well, I walked in there once and there was like 9 million women in there. So, I mean, it is definitely a popular store because they've got like every knick-knack thing you've ever heard of in there.
Look at this. They're drawing a trend line.
Oh, yeah. Well, wow. I mean, they buy overstock and then they sell it and stuff. So they've got, it almost looks like a garage sale in there in some respects. But people love it because there's a lot of neat stuff in there.
No, here, look at that. Monthly max. Look at that. 250, 28. It has been an alignment to go up. Look at that. Came down and touched it. It's been an alignment to go up since since 1995. How about that?
Another one coming out Thursday that I made a good situation on last time they had earnings because it popped big is BJ's Wholesale, BJ. Yeah, people like deals. Look at it. Yeah.
Well, you certainly look at Costco, right?
Yeah.
Through the roof. Here's another one. Wow. You found some gold here.
Well, like I say, people like these companies. There's no doubt about that.
I mean, it's rich. It might be rich, but look at that.
Yeah, it is rich.
It is still, everything's this is a monthly chart that's in alignment to go up. And as long as, if it's going to correct, it hangs out above that 20, then I think you're safe.
Well, they got numbers coming out, and so according how that consumer is doing, and if the consumer is out spending, they're probably out there looking for a deal, and BJ's is all about a deal. That's why it's called BJ's Wholesale. Yeah. What about Ralph Lauren, RL? These are all happening this week.
Well, it would help if I cleared it up first.
RL.
Wow. Nice recovery.
Yeah.
They were threatened with tariffs, right? Because they import.
Yeah.
Okay.
It's a little tough with the options right now in many things because they've had a big run and they're kind of in no man's land.
Yeah, right now. But I
In other
think,
words, that thing could go up to 294 if it wanted to, but having a reversion to the mean to 212 wouldn't be off the table on bad news.
well, you kind of have to think that's all-time highs, right?
That's what I'm saying, So,
So,
but let me put it this way. This is one where if they announce bad news, look at that RSI. So if they announce bad news and they couldn't take out the high, and there's a gap underneath, and it is $60 above the gold line, this would be one that could drop 10, 20, $15 pretty fast.
and still not touch that
No,
eight.
it'd still be an uptrend, but I mean, the puts would really jump through the roof a little bit
Yeah, that
if,
would.
in
Yeah,
fact, if you go down from 277 to 235 or something for some reason,
yeah,
there'll be some put activity underneath that'll be quite valuable.
absolutely, absolutely.
Yeah,
I,
and that RSI kind of lets me think that it's going to roll off of that yellow bar a little bit, maybe.
but just because I know we're going to conclude here, but I just want to bring this right around because you had started and you were talking about value and you were talking about overvalue. Would you think this is overvalued?
Well, it looks like it's definitely looks like it's rich up there.
Okay, so because that's kind of been my point too, that we've reached that level where a lot of companies they're just rich up here, particularly like clothing stuff, Lululemon or whatever they're called, Lululemon.
Lululemon, yeah, yeah, yeah.
I was like, oh, come on, you're way up there. It's like, what do you make yoga pants? Okay, other stuff I realize, but still, look at their valuations. That's been a big thing for me all along. Is like looking at the valuations.
Well, again, sometimes the valuations are higher because these companies are making more money year over year. We had first quarter earnings come in. They were up double digits. So, there is a lot of paranoia about the valuations, but there's two ways the valuations work. Interest rates go down. That's not happening. Or earnings go up, which is happening. Now, the key is will earnings ever contract? And if they do, then that'll be the Achilles heel that kills the stock market. Since we're coming up to the top of the hour, let's tell people how they can get a hold of you and give them a little more idea of how you help traders.
Okay. Again, you can get a hold of me by sending me an email at michael@mgf1partners.com. And I don't know why I ever named it that way because the factor is MGF1. There's only one partner and it's me. But you can send me an email. What I'm working on right now, I do have YouTube channels and I post through membership on the S&P and the NASDAQ in the morning and in the afternoon, and then I do a weekly. I have a live stream, which is more of a trading room, but I'm getting ready to announce that I'm going to have a membership that's going to cover everything that I publish, everything that I post. And I'm thinking about like $1 a day. So it's going to be like $20 a month, and then you have access to everything. And I do gold, silver, platinum, bonds, the Dow, the Russell. I mean, everything gets included instead of just being focused more on what everybody loves, which is the S&P and the NASDAQ. And so that should be coming soon. And that's really about it for right now.
Okay, good. As far as Option Professor is concerned, we've got a pretty simple deal here. We have a thing called the Options Alert Service, and you get three things when you join up. First thing you get is education. We have a 6-hour course that you get absolutely free. Then we have a market review every Sunday night, and we have ideas every Sunday night. And then finally, we have coaching. I talk to you directly like I'm talking to you now. We go through your trading challenges and other challenges you have. So if you're just starting out or have experience, I probably have some input that I could help you with to hopefully enhance your trading. So that's Option Professor Options Alerts. And David's going to put up the link, but you can also email me with any question you have right now at optionprofessor@gmail.com. Michael, it is always a pleasure. It'll be very interesting to see. We got to do this after another month or so goes by, so we can see how
I'm
things
really
shake
glad.
out. Because we're either gonna blow out this 6,000 or we're
I know,
gonna have
right?
a correction. So it's not gonna be the one thing. It won't be the same.
But one thing I said, I will add one thing, by the way, because I forgot. I also provide coaching and teaching. So,
Yeah, that's important.
in options and just in trading. Now, one thing that I wanted to say, Jim, last time we were on, I said, "Hey, my birthday's the 18th. Let's do the show together on the Monday," and we are.
Perfect. And
And
happy birthday.
Oh, thank you. But what I thought was interesting is like we did try to press 6,000, so we're still there. And
Yep.
I love the way that we're still, we're updating.
We're knocking on the door. We'll see if we
We
can
are
get through.
knocking on the door.
Yeah. All right, David, I'm sending it back to you. Thank you, Michael, and thank you everybody for being here. Have a great night.
Yeah, I meant to put that in my email earlier today, Michael. Happy birthday. So
Well,
yeah,
thank you very much.
glad that worked out that you could be here. So
Yeah, me
um,
too.
all right, yeah, great discussion, guys. So just for a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and Substack and your favorite podcast app to get access to all the archives and shows, presentations, or you can just go to TimingResearch.com and the recording of this show will be on the top of the page as soon as I can get it processed. Um, Also, like I said, on you can find it on YouTube and podcasts and everywhere. Um, and also, just a reminder too, in case you missed this, we had a big Synergy Traders event last week, Tuesday, Wednesday, and Thursday. Um, the theme for that was pillars of a profitable trading plan, and Michael and Jim both did um, presentations for that event. So if you just go to TimingResearch.com, you can scroll down and find all the archives for that as well. So, all right, that's it for tonight. Thanks, everyone.
Thank you.
Thanks, Michael.